Hey everybody, it's Brian Ullman at Ford Financial Group with a quick March update. I didn't want the month to get by without checking in with you with one of these video updates. I'm not going to do a deep dive though this month because we have several other things coming out here in just this next week or so that can give you the deep dive that you're looking for. Specifically, we have our firm's quarterly deep dive into stocks, which you should receive in your email inbox. If you don't get these emails, shoot us an email at info@fordfg and we'll certainly get you on the list to get our quarterly deep dive. We also have our monthly financial planning newsletter coming out here very soon. And so that will also give a little bit of insight on what's going on here with markets. Suffice to say, though, we are rebounding. Stocks are back moving higher. As I record this, the S&P 500 is only down 3 or 4% year to date. So a huge comeback in these last 2 weeks. And we've seen some significant rebounds because markets are in part getting used to the idea that the Federal Reserve is going to be raising interest rates pretty considerably over the next year or so. And that idea has settled in along with these kind of inflation notions that we have. It doesn't seem to be kind of affecting corporate earnings quite so much. Now, stocks have bounced back. Bonds haven't so much, also because of this interest rate item. And then also we are kind of seeing some sort of signs of resolution here to what's going on with Russia and Ukraine, perhaps making steps towards peace, which is also going to provide a big rebound for markets. Now, with all of this said, it's a big relief, but this has also been a bit of a dress rehearsal, you might say. We are starting to see some signs, and if you watch maybe too much cable news, you'll see that we are seeing some signs like the inversion of the yield curve, which I'm not going to go into here, but some signs that there is some trouble on the distant horizon as far as the economy is concerned, perhaps wrestling with the notion of recession. Now, we're not going to panic and get bent out of shape over these recession notions that are really off into the distant future. Just kind of for some context here, when we have something called a yield curve inversion, that's usually a pretty good predictor of recessions, but that's something that could be years away. So don't get too worked up about this idea yet. But the idea, though, is that whether it's because of a midterm election year or a yield curve inversion, we've had a bit of a dress rehearsal on what a market correction, true market correction, feels like for the first time in a couple of years. And so if you're having difficulty with what went on these last couple of months, if you were calling us or your financial advisor and saying, what do we need to do about this? Well, whether we're getting back into positive territory with the market or with your portfolio, now that you're kind of back at that near break-even point or maybe even past it, it's a good idea to take a real hard look at things and say, okay, how did we fare during that brief storm? It was 2.5 months of the market falling for various reasons, but the fact is we had kind of what was I would describe as an average market correction. The causes are always different, but the size of the correction is roughly the same here. And so how did that work out for you, right? Were you calling your advisor? Were you saying we need to make changes? Now is the time, once we have the rebound, to make those kinds of changes that you might be thinking needed to be made, whether it was in February or even the beginning of March at the depths of the correction here. So I'm going to just leave it here with that. I would say we are on the mend here, to put it succinctly, and it looks like there are clear skies ahead, at least for the time being, but we're probably not out of this entirely, and we still need to wrestle with inflation, higher interest rates, and the stuff with Russia and Ukraine aside. There is still some much more fiscal and monetary policy here that's going on that we'll have to wrestle with as investors. So be happy that we have some relief, but we're not going to rest just on that. We're going to be preparing for the future here. So if you have questions about your portfolio or your retirement plan with everything that's been going on so far this year, email us at info@fordfg.com. Also, subscribe to this channel so you can see future video updates. We'll make sure that you get in on those. And if you've watched all the way to the end, I'll also let you know that in May we're having our first in-person client educational event that we've had in, I guess, 2 years now, coming up on what the economy and the world looks like post-COVID. So stay tuned for that.